Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands, 19th day of December 2014, and this is the daily report for gold and silver, our weekend review, and what a week we've seen. We do have the equities markets reaching and coming very, very close to their record highs, along with the Standard & Poor's. Gold is trading off a little bit, off roughly $2.10. Current print is just under 1,200 by $2 to $3. Low 1193.30, high 1202.20. Silver attempting to form a little rally today, up almost 20 cents on the day, but it is over 1604. That's our current print. High 1621, low 1578. More on silver in a little bit. Traders, this will be a shortened edition of the weekend review, as I just did come out with our Outlook 2015. That will cover all of our long-term forecasts in terms of where we think the markets are going towards the end of this year, beginning of next. This will focus, of course, on our very, very short-term outlook in the market, what we're looking at next week. First thing we have to take note of is the Dow Jones Industrial Average, Standard & Poor's 500. This is the E-mini. You can see that we hit this top, about 2080, and are trading roughly 8 points off of that record high as we go into the close on the equities markets. Dollar index strong. Look at the dramatic move. This is a weekly chart right now, and you can see it's totally engulfed any kind of kickback that we saw last week. We are trading at new highs, and when I say new highs, I'm talking about new highs above this most recent triple top, beginning, call it mid-2008, going through the mid of 2010. And you can see we are absolutely above that point. Now, when we take a look at this market a little closer and we go and we compress this, let's go ahead and do that right now. You can see that although we are at the top in terms of a strategic high, say over the last few years, we have seen this market much, much higher as it traded up here, and this was back, of course, in 2000. Now, assuming that the dollar continues its strength throughout next week and the end of the year, and we are able to breach this particular price point roughly at 89.50, we are at 89.84. Our next real level of solid resistance doesn't come in till about 92, with some minor resistance just at about 90, I believe 90 to 91 on the dollar index. Traders, as you know, we put out a forecast in our Outlook 2015 looking for the potential of this market to go as low as 1032 down to about 952. And we base that on a couple of different techniques that we use, primarily Elliott wave modeling. For more information, go look at the Outlook 2015. However, when we look at that, we also talked about the fact that gold has really been running in a negative correlation with the equities markets and the US dollar. Our main point is that if equities remain strong and the dollar remains strong, we should expect to see some weakness continue in gold. And to that end, I've pulled up our weekly Standard & Poor's chart, and I just want to go through a very, very quick fib extension. If we look at this as a wave one, we then had our correction. If we then do an extension of wave one, forecasting that typically on an Elliott wave, your wave three can never be the smallest of any of the impulses, but is typically 1.61 that of our wave one. Our top level projection as to where the S&Ps could go is roughly 2181. So in other words, we see quite considerable room to the upside. If in fact that's how that unfolds, we would in fact continue to see pressure in gold pricing throughout at least the first quarter of 2015. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.